Let's talk to Shaun Richards. He's from NotAYesManEconomics, and he's certainly not a yes man. Shaun, as always, welcome to the show.
Morning.
You just commented on my brown shoes. Tell the audience that, because that was...
Okay, we're back in the day, my first day in the city, Phillips and Drew. Two of us started, both graduate trainees. The other person came in, I won't name him, a pair of brown shoes, so they sent him home to change.
Yep.
Brown shoes were for the country, he was
They
told.
are absolutely right. That's exactly why I wear them. Right, let's talk about serious stuff. Let's talk about the Great British Pound against the cable. It feels great at the moment. We're above this 140 level. More importantly, where does it go from here? Because invariably on cable, everyone seems to get it wrong.
Yes, well, that's always been true for about my whole career, actually. It invariably goes where people don't want it to. For the minute, this particular phase for us is welcome because it'll help with inflation. So many commodities are priced in that, particularly oil. So the other side of oil, having several goes at trying to go to $70 in Brent crude terms, it is that at least we're dividing it by a high level of the pound. So it is helping on that front. In terms of the numbers, I'm sure any of those watching this will remember that the only way was down, we were told, at 121, which hasn't quite worked out. I also remember us being told that 131. And then there was another go, I think, on the chart level, just over 136. So that's all. The other side of this, of course, is the fact that it's the dollar that's weak, which is probably the bigger influence here. If we look back, the problem with this is, of course, those that can recall the EU leave vote night, that it sort of shot up and then dropped like a stone as first people thought we were going to stay in. Then we'd vote out, so it went to 150, and then before that, if I remember rightly, it was about 144.5, so will it have a go up there? People want my opinion. I thought after it all settled down, the pound would probably be around about 135, that sort of level, and we'd go along there for a while. What, of course, we've actually had is, it's been all over the shop in many respects. If we break down the numbers and look at this in terms of the economics, and there's the first bit, which is the anti-inflation thing I said. If we look at it the other way and we go to the trade weighted, not quite the same picture. Obviously, we're up quite a bit against the dollar. We've lost a bit of ground against the euro. Not so much if you look at a year ago, but over the last 6 months, we've lost ground there. So in the measure last time I looked, there was only a couple of % change on the trade weighted. So the dollar rise has been offset. To put that another way, one of the measures I use, it's equivalent to about 0.5% change in bank rate, base rate. So that it'd be 1% now, to the same effect.
Okay. So talking of Bank of England and rate hikes, are we likely to get more than one rate hike this year, in your humble opinion?
I'm not sure really if we get any. I think we'll only get some if they're forced to. So it'll be the Fed forcing their hand by moving in America and them feeling like they have to.
Yep.
I think it's less likely pressure to come from Europe because if we look back on President Draghi's statements, he suggested he doesn't really think he'll raise the discount rate or rates in his term, which gets us into 2019 for that before he's off, so to speak. So it seems like they'll stay with reducing the quantitative easing at some point to zero this year.
Yep.
But an actual rate rise from them's a long way away.
Okay, let me ask you another question then. Euro dollar at 123 at the moment. This time last year, near as damn it, 103. That's a massive appreciation. Did people actually call that right on euro dollar?
No, because that was the time everyone was calling for parity on that.
Exactly.
As well, when this could be parity day. People were talking about parity for the pound against the dollar. What those things usually signal is then a turn, isn't it? If you follow markets for a while, you soon get that. Once everybody thinks something, you'll then get the reverse. Where this, again, applies to, particularly in the euro, and going back to the ECB and President Draghi, where this is awkward for them. Now, I think this is a good thing. Higher euro, same for them, lower inflation. Of course, though, they've gone through all this in a massively expanded balance sheet, 4.5 trillion euros, to get inflation up. So they're sort of like the equivalent of someone doing their athletics training running uphill, trying to get to 2%. Well, actually, the higher euro is taking them away from it. I think that's a good thing. Officially, they're aiming for 2% inflation. So we'll find out a bit more this week and the time to come, but they're stuck between a bit of a rock and a hard place.
Okay, final thoughts. Okay, what's your high conviction for 2018?
If the car market doesn't blow up in the UK, I think it'd do a lot better than everyone's thinking. Going to be awkward later this week, because if I remember rightly, we get the GDP figures. Where that could be awkward is That will include the Brent slowdown in December. So that could knock 0.1 or 0.2 off. Just simply that those that forgot, the 40s pipeline was shut for a bit, so that will affect production in December. So maybe that could nudge it back. But apart from that, in the circumstances, considering we were told it'd be the end of the world, the actual outlook was quite reasonable. And if we roll through, 2018 with what? Economic growth, 0.5% each quarter, grow by 2%. These days, that's not so bad, is it?
Yeah. No, that's thought-provoking as always, Shaun. Thank you very much.